Hi there, Anna. This is Alex Woods, financial mis-selling litigator and solicitor who's setting up a law firm in London, in Southwark, and has formed a relationship with a claims management company called Maple Leaf Financial in Oakham, Rutland Water. I wanted to do this video bulletin in order to try and persuade you to give us a meeting. And the question I want you to hold in mind during the course of this reasonably short video bulletin, I hope, is: do you think it might be worth introducing a trial batch of bankruptcies to us, say 100 odd, perhaps IVAs as well, so that you have the option, should the operation in-house be proving problematic, to then simply jump the operation over to a service company? Question mark. And I asked that question in the context of the unknown, which really is, for insolvency practitioners, have I got the reassurance of the service company that I've contracted this work to doing it professionally and in compliance with the ethics codes and the statements of insolvency practice and the guidance note, etc., etc., or might I have to spend all my effort dealing with the administrative headache of supervising and managing them? And that leads to the second key question, which is, if I do it in-house, are the costs of the operation going to consume the proceeds? So those, are the thorny issues, I suppose. I actually believe that good returns can be paid to the insolvency practitioners and into the bankruptcies and the IVAs. And I actually believe that we are the right company to do so for a variety of reasons. The first reason is that we have an ethos, if you like, which is, there's two prongs to this. And the first prong is, we don't actually want to be a volume operation. I'm quite familiar with volume operations running PPI and insolvency. And it tends to become a big exercise in, shelling peas. And I don't believe that this is an entirely shelling peas exercise by any stretch of the imagination. We aren't interested in taking on the huge volumes of work. We just really want one, perhaps two insolvency practitioners. We've got a meeting with RSM Tenant at the end of the month, and we're also approaching Mazars. And then we also want a small number of small, medium-sized insolvency practitioners. But we're talking about single-figure thousands, not five figures, and just really a modest number of IVAs and bankruptcies that we can use to get our teeth stuck into, and as a springboard really for the bigger strategy of both our businesses, which is to cement ourselves in the sector as a reputable financial mis-selling, litigation and insolvency business. And by way of illustration of that, I as a litigator have 3 to 4 years experience of payment protection insurance litigation, and I was in court in June 2011 against MB&A and managed to increase the amount of compensation over the period of negotiations from £3,800 touching £4,000 to £6,750. And I've discovered across all my other cases that lenders are often not making full compensation offers, and they should simply trying to get away with derisory offers, which is no more nor no less than you would expect from a large bank, which in certain respects is morally neutral and is trying to, might have hoisted the white flag insofar as admitting that they've missold payment protection insurance, but it's not necessarily paying out full compensation and paying out compensation in quick fashion. They're simply not paying out as quickly as they should, and as greater quantities as they should. So I'm now working with Maple Leaf Financial in Oakham, Rutland Water, and they are the penny is dropping, that they are now challenging decisions from the banks where appropriate. They are now introducing work to me to litigate where appropriate, and they are not settling for the first offer that comes along. They are maximising returns. And just to give you one example, I've got a desk over there which I deal with complex matters that come from the operation in Oakham to me to deal with. And one that I've got is, for example, a client who was clearly using credit cards as an overdraft facility alongside their loan, and we believe that the banks have paid an incorrect amount. They've paid 6,000 odd, and we believe that the client is entitled to a further 6,900 because they failed to use the correct compound calculator on top of the premiums that were charged in respect to the PPI on his fixed term loan, her fixed term loan. Now that's the problem with a lot of claims management companies is that they are just simply no more nor less than a postal service, and I have sympathy with the banks in this respect, that a lot of claims management companies are taking their 25% for doing very little. I have no problem with a claims management company that's taking its 25% and in return they're actually representing their clients' interests, and where they think the bank has tried to send a cheque for £1,000 in order to, in the hopes that the client will simply bank it, cash it. And the banks will often send cheques direct to the consumers in order to cut out the claims management company. The consumer just simply catches it and thinks that the bank have calculated the right amount. I'm afraid to say, call me a cynic, but after 4 years of dealing with these cases, the banks are not whiter than white. They're not whiter than white in the way that they've sold payment protection insurance, and they're not whiter than white in the way that they are cleaning up payment protection insurance. So this means that you need a determined, specialised operation in order to, your focus needs to be on maximising returns, not just processing payment protection insurance quickly and efficiently, but also not settling for derisory offers. So, there's a plethora of examples I could go into, but I won't at this stage. But it's not just a one-off situation. Now, just a little bit about the pedigree of the operation and the structure and why I think it is a good bolt-on to Mazars. I have set up Redwood Legal. I'm a recognised sole practitioner. I'm a small boutique financial mis-selling litigator representing insolvency practitioners, fellow professionals, and also representing consumers and small businesses. I am outsourcing to Maple Leaf Financial in Oakham, Rutland Water. They have a big facility, a big office on 2 floors. They are not paying over the odds for the space that they're using in a business park outside Oakham. And I've been there on a number of occasions, and they've got a first floor which is dedicated to processing payment protection insurance in insolvency. They're geared up, they're set up, as am I, and ready to go. We're not like a law firm who may have a bit of baggage, if you like. They've got history of working in other sectors and have their focus being on different areas of law, and perhaps they're not being set up in a cost-effective way as they could. We are, and we're able to dovetail and to tailor operations to this particular scandal. We want to use the financial mis-selling issue, the financial mis-selling scandal, as a springboard into financial mis-selling in the longer term, and in its widest sense, going from a little PPI claim along to interest rate swaps, mortgage mis-sellings, and much larger sorts of financial mis-selling, as well as litigation in insolvency. So that's what we are. I have set up a PPI in insolvency unit at another law firm a little over 2 years ago. I'm now consulting to another law firm, the one that my brother is a salesman for. I've completed my consultancy. I've been consulting to them for a year in order to help them to start their own PPI and insolvency unit. I think that whilst it's good to have a law firm involved because it gives you peace of mind in respect of compliance issues, I think our operation is kind of leaner and meaner in many ways because the law firms are finding it problematic to generate profits and to cash flow their operations because they have bigger overheads. And a bit like insolvency, it's a bit like insolvency practitioners processing PPI in-house. Law firms do also, unless they're pretty smart about it, have problems with processing PPI in-house, and are not. The operations aren't quite as turnaround and as quick and efficient as I had envisaged, or indeed as I had hoped. So I think this gives the best of both worlds, because you've got litigation where necessary here in London, and you've got the processing in at the claims management company in Oakham, Rutland Water. The third and final thing before I conclude is I think that it's important not to fall foul of a false economy in instructing a claims management company that is offering very competitive rates, and I've seen ridiculous rates quoted of 15%, to process this stuff, because needless to say you'll end up having to supervise the claims management company running your claims, which will be an extra management headache, and or worse, they'll just simply go on and do it and not do it professionally, and you'll be creating a proverbial bum biter for yourself down the track. And I say that without sort of dropping names. I've spoken to other insolvency practitioners. I've spoken to one particular insolvency practitioner whom I respect on this whole area, who knows more about the law, frankly, than I do. And he, they have been using a claims management company, and it's not been entirely fruitful. You want the claims management company to be fighting your corner and to be aggressively claiming against the banks. Now, it's not only an issue of compliance, but it's not only, and that's important enough. I mean, there are complexities, there's no question about it, as anyone will have realised if they've read the guidance note. One of the classic ones for me is the difference between the 2004 R3 terms and conditions and the general protocol of 2008, and you see a shift from relying on the Insolvency Act and treating, this is an example in respect of IVAs, in respect of the R3 terms and conditions, the Insolvency Act is pretty much copied and pasted in terms into individual voluntary arrangements, standard terms and conditions, whereas you see a shift away in 2008 to an IVA being its own instrument, its own vehicle, debt management vehicle, with its own set of equitable laws and principles that apply. And so therefore, in the case of one client, I had to tell them that no, I'm afraid it falls under the 2004 terms and conditions, therefore Royal Bank of Scotland was entitled to set off your payment protection insurance claim, even though the IVA had closed some years previously. Whereas with the 2008 terms and conditions, providing the credit has not argued set off during the course, the currency of the IVA, that it make it very difficult for them to argue set off post completion. That being said, our practical experience is, and I'd assumed that perhaps 25 to 30% of our entire business, running about 1,000 IVAs across these two aforementioned law firms, would be susceptible to set off, and it was a real threat to our business. I've discovered that where one fights one's corner on this issue, when one vigorously argues, and if you're running them in-house, this is an argument that you should use, that no individual creditor should be preferred over another. So where you've exhausted all the other arguments against set-off, that for me is the final nail in the coffin, and it has worked. Cooperative Bank were our first case. I thought we were going to have difficulties with them, but we wrote a couple of firm and nasty letters, and they capitulated. And I hear generally, anecdotally, amongst insolvency practitioners, that set-off is problematic, and that perhaps is one good reason why you should use not a CMC, because they won't do a better job than you will, but a CMC who has a relationship with a law firm. That's a bit unfair on CMCs, but a properly trained CMC, perhaps one that has an in-house solicitor or a law firm. So I've rattled through a round the world tour of the very factors and features and issues that might be relevant to this decision of whether or not to use a third-party service company. And to conclude, I'm simply saying ask yourself the question, would it not be a good idea, I was going to say prudent, I don't want to sound patronising, but would it not be appropriate and professional to be instructing a service company, at least on a trial basis now, not being the proverbial ostrich, but instructing from whom you will gain knowledge about how to run your own in-house operation at the very least, with a view to then bouncing the entire operation over to that service company down the track if it becomes necessary. You'll then have a ready-made relationship to run with. So there it is. I very much look forward to meeting you in person rather than over LinkedIn or by means of any other electronic device, and having the opportunity to produce a tailor-made pitch to Mazars business along with the team at Maple Leaf Financial. And you know, if nothing else, you will be able to tap me up for some free legal advice, as well as some stories from the trenches about how other insolvency practitioners are coping with the problem. So I'd be very happy to meet you and to answer. And if you've got any further questions, then please do ping me across an email.